I ranked every major New Zealand city based on if they're a good investment or not. From S tier, the best places to buy right now, all the way down to F tier, the places I'd run a country mile from. And I've got to warn you, some of these rankings, they're going to make people angry. The mayor of one of these places even emailed me asking me to stop putting their region on my do not invest list, to which I said, sorry, not sorry, because the data, it doesn't lie. So how did I actually rank all of these cities? Well, I looked at the 6 factors that most property investors care about, including the population, because more people means more potential tenants. The property cycle, so are prices undervalued and look a bit cheap, or are they overvalued and look a bit expensive right now? I also wanted to dive into how affordable houses are. Can people actually afford to buy a house there, or have house prices potentially hit a ceiling? And of course, the average gross yield. So how much rent do you get versus the price you pay? And I ranked each city from -1 to 1 for each of those 6 indicators, which means the highest possible score a city can get is 6, the worst possible score, -6. Okay, let's rank some cities. First up, we have got Wellington City, and that is going into B tier. Now, I know some of you are probably typing some angry comments already because Wellington's the capital and it's only going to go in B tier. Well, here's the thing. People in Wellington do tend to earn really good incomes, and honestly, it's some of the highest incomes in the country. The population's pretty decent, about 210,000 people, but the average gross yield, 3.5%, not that great. And Wellington is still recovering from the fact that in 2015, house prices, they took off for like 5 years. Then COVID comes along and property prices, they boomed again. So it was a double banger boom, and that's why house prices have since crashed in Wellington by about 30%. Now look, I'm not a Wellington doomer who looks at the headlines about every second cafe in the capital closing thinking that Wellington's dead forever, because that massive property crash, that's going to set up the next boom. But I think it's going to take a couple of years and probably a red-led government for that to happen. So Wellington's fine, it's not bad, but it's not where I'd be putting my money in 2026, so it's B tier. Let's move on. Next up, we've got Taupō. Now, Taupō is going straight into F tier. Now, Taupō, beautiful place. Great place to visit, great place to own a holiday home, terrible place to invest, at least in my mind. The population's small, it's only 41,000 people. And that small population, it's actually not expected to grow much, like less than 10%. And house prices are pretty expensive, around $800,000. The gross yield, only 3.9%. So in my mind, look, with Taupō, you're paying Auckland house prices for a town of 41,000 people with below average population growth. So the way I think about it is, it's too expensive to be a yield play where you really care about the rent, and it's too slow growing to be a capital growth play. So it's stuck in the middle, worst of both worlds, it's going into F tier. But if you disagree with me at any point in this video, that is a good thing, because I want you to let me know in the comments what you think I've got wrong, and then we can have a big discussion about it. And while you're down there, if you're enjoying this video, do me a quick favor and hit the like button, because that's how I know which videos I should do more of, and honestly, it really does help with the YouTube algorithm. Subscribing, that helps too. We're on our way to 50,000 subscribers, and you guys have already helped us build this channel into the largest property investing community in the country. All right, let's bring it back up. We're going to Hamilton now. Hamilton's going to go into A tier. And the reason for this is Hamilton's solid. Not spectacular, but pretty solid. Population of about 181,000 people. It's a proper city. The population growth is really strong. It's expected to grow over 30%, which is one of the best in the country. House prices are still really affordable, more affordable than Taupō, $760,000. Still affordable for a city of its size, and incomes are pretty decent. In fact, I've sent Andrew, my podcast co-host, to go out scouting for Hamilton properties as I'm recording this right now. Now, one thing to watch out for is the yield. The average gross yield is 3.9%. It isn't going to blow your socks off, and I've found that sometimes Hamilton house prices can be expensive and you don't necessarily always get the rent you'd expect. I also used to own a property management company in Hamilton, and I'm going to say this, in our experience, the tenants in Hamilton, they tended to be a little rougher. Now, that's not going to be the case for every tenant in Hamilton, but we did have a bit more trouble with some of the tenants in the Tron. Despite that though, Hamilton has some good legs as an investment. It's in the golden triangle of Auckland, Hamilton and Tauranga, where half the country lives and half our economy is, and Hamilton's the most affordable major city in that triangle. A tier, not a bad pick. Next up is Queenstown. Now I'm going to surprise some of you all and drop it into B tier. Now, I know in some of my previous videos, I've had Queenstown like much lower, and look, I'm still really dark on Wanaka, right? On top of that, if you look purely at the numbers, you could argue that Queenstown is a terrible place to invest. The gross yield is shocking, just a touch over 3%, one of the lowest in the country. It's the most expensive place to buy a house in New Zealand. The average house costs $1.27 million, and for a town of 50,000 people, that's a lot of money. On paper, doesn't really make sense as an investment. But then I just bought an investment property in Queenstown. And the reason I did that is that Queenstown has something that most small Kiwi towns just don't have, which is global draw. People from all over the world, they want to live there, they want to visit, they want to work a ski season there, they want to retire there. And there's not enough accommodation in this small town. The housing shortage in Queenstown is real. If you rent a property on Airbnb, the yields can be pretty decent, and even long-term rentals, which is what I'm doing. With that, you can find good tenants pretty easily because that demand is so high. And look, I'm not a prepper, but there was this study in the Journal of Risk Analysis that ranked New Zealand as the second best place in the world to survive a nuclear catastrophe, right behind Australia. And there is a reason that Silicon Valley billionaires have been buying bunkers in the South Island. Now, I'm not saying that I bought a house in Queenstown because of the threat of nuclear war, but I'm not saying that either. Now, would I bet my whole portfolio on Queenstown? No, it wouldn't be the place I'd suggest that someone look at their first investment property, but after building my portfolio, do I want a piece of the action down there? Yeah, I do. That's why it's in B tier. Next up, we've got Palmerston North. And Palmerston North, would you believe it, is going in S tier. And I know what a lot of you are thinking. Palmy, really? S tier? One of the best places to invest in New Zealand? Yes, and it's not just because when I grew up 2 hours up the road in South Taranaki, Palmy was the big smoke for us, but it is a proper regional city. About 90,000 people live there. The population growth is solid. I mean, not amazing, but it's solid. The property cycle, property prices tend to look pretty undervalued right there, right now, and you're buying, in my mind, at a pretty good point in the cycle. And house prices are affordable while incomes aren't that bad. Top it off, the gross yield, 4.6%. One of the highest yields you'll find for a city of this size. Now, Palmy North, it ain't sexy. Nobody goes to Palmy for a long weekend and posts it on Instagram, but I care about the numbers, and right now I'm saying to my property team, the guys that go and look for properties for our clients at Opus Partners, go and see what's happening in Palmy, because I think Palmy gets overlooked because it's not Auckland, it's not Christchurch, it's not a lifestyle destination, but that's part of the reason why the numbers work right now. S tier, and I'm going to stick with it. Next up, we've got Dunedin. Dunedin, you're going in C tier. It is because Dunedin's fine, it's right in the middle, decent sized city, yield's okay, but the population growth is like really weak. It's less than 5%. So you've got an okay population, but it's not really growing. It's one of the lowest on the list when it comes to population growth. And I just don't think it's at the right part of the property cycle for most investors. Now, for me though, Dunedin is also a bit of a pick your poison market. If you care about yield only, I think it can work. If you care about capital growth and your house price going up, it's not top of my list. Next up, we've got Tauranga, B tier. Tauranga is the classic investor favorite city. Everyone talks about Tauranga, but when you look at the numbers, to be honest, it's just okay. The population growth is pretty strong, a little bit slower than Hamilton, 28%, that's good. But house prices, the average house price is $890,000, and they are getting expensive, and the yield at 4%. Pretty average. The property cycle suggests Tauranga is slightly overvalued right now. So look, Tauranga, it's fine, it's not bad, but it's not where I'd be rushing to buy in 2026. That's why it's in B tier. Next up, we've got Whanganui. Now you might think it's going to be really good because Whanganui is only an hour from Palmerston North, but actually I'm putting that in D tier, the second worst tier. Now Whanganui is really interesting because on paper, Part of it looks great, right? House prices are cheap. Median sale price of a house, $430,000. Like, it really is cheap. The gross yield, 6.4%, one of the highest in the country. So if all you care about is yield, Whanganui could work. But there is a problem. It's another one of those cities that went through a double banger boom. And it could take years to recover from that. The thing you've got to remember about these smaller cities is that property prices boom, they go off like a frog in a sock, and then they stay flat and could stay flat for many years. So if you just look at what the price was 25 years ago and what it is today, you could think that Whanganui house prices go up really fast. And they do for 3 or 4 years, and then they're flat for a decade. Whereas in some of the bigger cities, that house price growth is more consistent, and that's what I'm more interested in rather than just a quick boom. And that's why Whanganui goes into D tier. But next up, we have Rotorua. Rotorua is going into C tier. It is middle of the pack, decent population, 77,000, much better than Taupō, yield of 4.4%. But again, the population growth is pretty weak in this part of the country, just under 7%. If it was me, I would go to Rotorua and invest there rather than Taupō. Nothing wrong with Rotorua, but nothing special either, C tier. Now, the way I actually use all of this data that I'm talking about to actually invest though, to be honest, it's pretty simple. As I mentioned before, I've got a property team that goes hunting for investments around the country for our clients at Opus Partners. So if you're watching this and thinking, I want to buy in one of these S tier or A tier areas, well, that's exactly what the team helps you with. And that's why I created the Opus Wealth Pathway. This is where you work with a financial advisor, a mortgage advisor, and a property manager who can help you invest in areas that the data supports at a time that suits you, and with a structure built around your goals, to take you from thinking about investing to actually building your portfolio. Now, if you're keen to take the first step on the Opus Wealth Pathway, I'll drop a link in the description to book a free session with the team. All right, we've got a few more cities to get through. Next up, we've got Lower Hutt. Lower Hutt is going into A tier. Now, Lower Hutt took an absolute beating over the last few years. Property prices dropped hard, some of the worst property price drops that we've seen anywhere in the country. And that has created an opportunity because house prices are down over 30% since they peaked, and they are still falling. But I think they may have fallen too much and may have potentially overcorrected. So Lower Hutt for me is a recovery play. If you believe that the Wellington region is going to bounce back, Lower Hutt is where you might like to buy A tier. Our last two cities. Next up, we've got Christchurch. That is going into A tier as well. Now, some of you might be surprised that Christchurch isn't an S tier because Christchurch is a market that I really like and I've been going on about for a lot. It is the second biggest city in New Zealand. It's got good population growth, pretty good yields, pretty good incomes. Everyone seems to be moving to Christchurch. Even the mainstream media has caught onto it. And if I did this list 3 or 4 years ago, Christchurch would have been at the top. But house prices have accelerated, right? We have seen the great Christchurch catch up in house prices, and that advantage where Christchurch was really cheap and nobody was really talking about it, but would had this recovery from the earthquake, that advantage has somewhat diminished. Not gone, but it's not as big as it once was because house prices have sped up ahead of some other parts of the country. So it's A tier, still strong, but not S tier. And last but not least, we have got Auckland. Auckland is going straight into S tier. And this is one that I think is going to start some pretty strong arguments because Auckland is New Zealand's biggest city, about 1.69, call it 1.7 million people. The most expensive, and it is our major city in the country. And the reason I'm putting it into S tier is that Auckland has been through the ringer. House prices have dropped hard. The median sale price is still around $1 million, but relative to where house prices were and relative to incomes, Auckland is now looking pretty undervalued. The property cycle score shows that Auckland is at one of the best buying points I've ever seen for the region. The population growth is strong. You've got 1.7 million people there. And if it goes up by 25% like it's projected to be, the city will tip over 2.1 million people over the next few decades. Now, that is like if everyone in Christchurch packed their bags, took a flight, and moved up to Auckland. And all those people are going to need somewhere to live. It's our only international city, and that's why the average household incomes are really high there. Now, here's the key. Not all of Auckland is equal. If you're looking at Auckland right now, I'm personally focusing on South Auckland and some parts of West Auckland. This is where property prices are lower, rental yields are higher, and honestly, there are a lot more tenants around here. Central Auckland and the shore, it's still expensive, still tough to make the numbers work. Not impossible, but tougher. South and West Auckland, that's where I see the opportunities are, and Auckland is back in S tier. So there it is, every major city in New Zealand ranked, and if you want to see the properties I'm actually buying in these markets, the link is in the description below to book a free session with my team. But knowing the best or the worst cities to invest, that's just the start. The next step is to turn your property into a portfolio. So make sure you check out this video where I show you how to use one house to buy 5 more. Tap the video on your screen and I'll see you in there.